Hey everyone. Just really quickly here because we only got a minute to open. Um, we already just kind of discussed what we were looking for. It's pretty straightforward. I think, hello, I think it's pretty important that if they want to give us a decent open, we have some odds to gap, not that we need to, but it would be nice if they gave us like a 346 point opening range. So minimum like 343. So I was thinking like obviously anything above 6586, 8788 is going to be a zone open. They closed us at 6588 on Friday, which is the exact range of the zone. This is off the closing or opening ratio from the fourth. Off the low range, we can afford some risk, you know, like if they want to keep us a little bit lower, but obviously opening closer to like 6597, 6594, 6593, like these 343 to 346 ranges would be a little bit better for us. The best case scenario was if they were to gap us up closer to like the 6505, 6510, okay? Because this would be off like the opening range here. I don't know if we have really high odds for that, but let's just keep it as a probability just in case. It's definitely not required, but I feel like 6588, 89 minimum kind of open. I think the minimum or max open that we were allowed to have was close to like 3586, I think. So we didn't really want to open beneath here. Okay, so minimum open here, max opening range around there. It looks like they opened us kind of right where they closed us. So that was pretty expected. I figure that they'll probably open us flat since that was within the range. So it just becomes a very big overhead that they have to come and clear the 6605, okay, like off these ranges. The 6610, which is going to be the 346 point range above that closing price. So like kind of like this range in here, 6609. So with that kind of an open, it just makes it so that we really have to try meeting these conditions and ideally early in the session. Does that make sense, guys? Usually when you break a 346 point range, you can typically average like 356 to 358. I did notice that they did break 346 points from like a closing range or a low range from the fourth, if you guys can see that. And the first major overhead would have, of course, been like the 343, which is why they stalled 6600. So just FYI. So that'll be the first lot that we have along with that 03. So we have some slight overhead at 6600, 6603, and then obviously the 6605, 6609, like that kind of range there, like this area in here. We stalled at 6606, I think, right, on Friday. So that's actually pretty good. That's implying that we just have to break literally like 0.25 higher. The actual area off that closing price is 6606.25. So just mark that on your chart. So when and if they come and take out this 6606, it only has to take it out by 0.5, okay? That's like the minimum requirement. And then obviously, ideally, if they can push to like 6609, 6610. From a high to low ratio, we've already broken 358 to 356 points. Do you guys see that? Okay. The only thing that we haven't done though is we haven't closed above that yet. So usually, so from a low range to an opening range, we broke 356. Are you guys paying attention? Because I have to finish the report, so I just wanted to stream this so that you guys have that. So from a low range to an opening range, they broke that range, okay? From a high range or a closing range, we haven't done that yet. So we definitely have to have ideally like some closing points above at least this 9.6 area, okay? Ideally, I would say 358 would be even better, and that would be like closer to them taking out this this 6597. Like if we can get some closing points in here, I feel like that would give us the better odds of getting core ranges. Do you see this? So like once they extend that, then we have odds of getting to like 6620, 6622. There's going to be a little bit of a neutral overhead this week too, around 6609. You can see it again. That's also the 356 58-point range. So lots of alignment with 6609.50. Okay, that's the 346 and the 358. Just depends on if you're looking at it from like highs to lows, open to close. And then from the closing ratio here, it's going to be around 66.13. So I'm seeing that there's like a lot of overhead around the neutral zone, like between 605, 09, 12, 13. But once they start clearing that, then we have some better odds. Keep in mind too, I also said that on those dates that they cleared, so like as soon as they broke like that 256-point range, which was back on August 22nd, okay, and we've been using a lot of these time frames here, so we can just go back and measure. So like, for instance, like some of these intervals here, like this runs through August 29th through October 16th. If you want to measure from here, you can, like the 22nd of August. That was the date to negate, so obviously up to you. Or you can measure from these, but this is when they were stalling 256 points. I don't know if you guys remember that. Do you guys remember that or no? This is when they kept stalling 256, okay? This was their deadline, basically, August 29th, to close above a 256-point ratio. Do you guys see this? So that was their first closing point, where they actually closed above, okay? On the high range, if you're noticing, there's a very similar pattern here, 253, 259, okay? Kind of the same thing, like they haven't really been able to close over like 352, 358. Do you see what I'm saying? So really, really, really similar in terms of like these conditions, like this range in here. And I figured that from here on, this is probably the midpoint around here. So we're definitely hitting like those mid intervals. And what you could do is also like measure, I've been measuring the range off of, sorry, this is, just move that, off of these candles here. So like even off of like, you know, here to here, you could technically look at this off like a 256-point metric. I would imagine that it's probably the same. Do you see it? Like it's the same thing. So we definitely have those odds. If you want to mark like the 22nd on here and measure off that stick, you can, okay, in the 256-point lots, because that's what it tracks, is usually around 256 points. If I've been measuring just off of the 29, 28 since that was the actual flip date, but just so you guys know, because August 22nd was also a very important date for us. But from these ranges here, they've already started breaking our 88-point intervals from the close to highs. So I would say that this is still some good progress here, right? And then I haven't really gone back and measured this, but I would still imagine it's the same thing. Like off these lows to highs, it should give us core ranges like 66, 27, 28. Okay, so it just kind of depends on which interval you're looking at. Okay, so like 3, 4, 6 ranges here, or 2, 5, 6 ranges from here, right? Or even if you were to look at it as like 2, 5, 6 from here, like it should give you those core ranges. That would be if you start getting some bigger extended odds up. Obviously, once you start moving higher than like these, we've already broken more than a 66-point interval, so that's good. From a high range to a low range, they're kind of holding off like 52, 56 points. I would imagine that where they close this is more than likely our 68 to 66 point lots. Yeah, that's very close. 65.5. Do you see that, guys? Look, this was the one measurement I haven't actually done yet, but I figured that that's probably the case. So from a closing point to a high point from here, okay, they broke 88 points. From a high range to a closing range, they're kind of hovering between 66 and 68 points. I don't know if you guys see that. So that's why there could be a tiny bit of risk, hence 66, 65, 90 maybe would have been a little bit better, you know, because then it just kind of poises that slight risk between these ranges in here. And I would imagine that the 44-point range from here is probably our 65, 66. Yeah, it is. Do you see that? And probably that 65, 58 is probably off this area here. Isn't that insane? So it's a really good way of utilizing the 44, 66, 88-point ranges up here, okay? Off of these specific calculated dates in relevance to these points in time here. So that probably means for this week, I definitely want to try holding above 65, 58, 65, 66. Like that would be ideal. And then if they can get the early week extensions just to kind of minimize our risk ahead of FOMC, Max range, I would say, is probably going to be around that 33, 34 point ratio, which should be exactly around that 6549, 6551. Basically the top of the means. I want to try avoiding going back to the channel. That's going to be our 34 point range from here. Okay. So 34 point ranges here is going to be around here. If you want to write these down. Right? If they held off a high range instead, I would imagine it would be probably closer to maybe this area in here. That should be around that 5.7 mark. So 5.7, 5.9 would be better, but we could technically afford a little bit of risk back to the top of the channel if that were permitted, okay? So this would be the 44 point range. And it's not a coincidence because these are right in line with Friday's open and Friday's lows for real time. Okay, that's definitely not a coincidence. So when we go back and look at this here for Friday's session, okay, Friday's real-time session would have been right back in here, this area here, right in here. Okay, so basically if we take out Friday's lows for real time, like the 65, 51, 52 area, we have a little buffer around 4.9, but then we might be at some risk of heading back basically to the zone area. So zone area being like these ranges in here. I would prefer that they avoid that though. 22 point range is the mid channel. So 653738, which was a huge overhead last week. Okay, you guys already know that. So I just want you guys to see how these areas align. Okay, so we have some channel support this week. I feel like that would be like the worst case scenario is if they were to break this back down beneath the means, is taking it back to the channel. So I really don't want to lose the channel though this week. I would prefer that they try their best to sustain above here, because if they didn't, I would imagine that the 17 point range, and if I'm crazy if this isn't accurate, 17 point range should be the top of the channel. Yeah, it is 6533. So you see how there's a lot of support between 6533, 38, 44, 49. That's basically the channel range, and that's what's going to imply what kind of odds we have heading to this week. So this is how we're going to have our calculated support for the week. So let's take a look. All right, so basically if they were to give up the Friday low, this range could get retested, and it makes total sense because these are also like the pre-release before PPI and CPI, okay? And then this is kind of the box range that would put us at a major risk, and that makes sense too considering these are the areas that they held September 9th and 10th, okay? We basically don't want to head back into the prior zone. We want to try staying away from heading back into this prior zone here. If they were to take us back, then obviously holding core areas would be a little bit more ideal, but if we can hold the channel this week, I think that that would be the best case scenario. So above 653338. Ideally, honestly, if they can hold above 6557 to 66, that would be even better. Okay, holding the zone is that would only be the case like if they hold above 6588, 6590, 94. They'd basically have to hold the line immediately off today's open and push. Does that make sense? So we do have some odds that they could do that, like if they decide that they want to hold a 66 point ratio almost immediately here. So basically this would be like a very bullish scenario. So a very bullish scenario is that they hold above like the minimum opening conditions of 8.4, 8.5, 8.3. Which also is in line with those 346 point metrics and the 66 point metrics here. Okay, I'm just giving you guys an idea. So this is them basically opening exactly 66 points from this high. This is where they open. So a very bullish scenario could be is if they hold 65.88, 65.83, 84, like basically upper bull zone and lower bull zone, sorry, or yeah, upper bull zone, lower zone area. And then they have odds of coming back to retest basically the 88 points in range, okay? And then this is where they could maybe start extending. Maybe they give us like 128 to 132 points from here. This would be like the more bull type scenario. We do have contract rollover this week and FOMC. We're almost always trading in a zone or channel pre like major releases like this, okay? These are also in line with Friday's lows. So basically if they hold Friday's lows and push right away to test our overheads, so our overheads being like this area here that we talked about, this area here, this area right here, this area here, and then obviously the 09, 10, this area being like probably the biggest spot. If they're able to hold the line overnight tonight and just keep pushing, we have good odds of our weekly lows already being in. Okay, I'm trying to give you guys all scenarios possible. This would be the bull scenario. If they push and retrace and can grab these ranges, weekly lows would be in. So that's one scenario if they really wanted to hold the line this week and expand and extend. Basically, it would also be the same thing as them holding above those 346 point ranges. Does that make sense, guys? So basically, it's basically them holding the zone. So 6, 5, 8, 8, hold and go. Okay? And since we almost always end up in a zone or channel pre-releases, that would mean that the zone that you'd want to sustain would be this one here, which is where they're currently trading within. So like this is that zone here. Turn these back on in a second here, hold on. Okay. That would be this zone here. So do you see that? That would be like a perfect zone hold. Okay. Because if this ends up being the low of the week and then we break another like 130 points from here, I don't want anyone to complain, because then we talked about the scenario happening in the event that they hold early on in the session. If that were the case, then the conditions would be that we'd have to be trading probably in the bull zone pre-FOMC, and then it would give us odds of maybe breaking into the channel. So, and that honestly would make sense, because if we're measuring from these dates here, okay, do you see that? This is a 128 to 132 point break. And the top of the channel is 6.5 or 6.6, sorry, 4.975. Okay, so an 132 point break from here would be basically that exact area, the 4.849. Okay. That's actually a really cool way of looking at this. So that's using that 33-day metric. It's also the first closing ranges above 256 points. And that would kind of align with this breaking into the channel here pre-release. This is also the 107 points, which is the 6622. So that's actually really interesting too. Like another way of looking at this. And then the final metric we said was the 88 points, which is basically where the highs are stalling. And that's our 66.0506. So lots and lots and lots of confluence in this area, guys, okay? And then so basically the conditions, guys, are you listening? Because we're only going to talk about this once. Basically, if you hold a 66 point ratio, okay, from closing price and high range, which is exactly where they're holding right here, you can get that 132 point range. 66 times 2 is 132. Makes sense? It's pretty straightforward, honestly. I think it's actually super, super, super straightforward, but that's how you'd get those odds. And it would probably have to happen immediately. Like, you can't stall that. So where they basically open right here is extremely calculated. Like this 8.9, where do they even open? 8.825. So they open around 65 points. So maybe you'll average around 128, 129, but just so you guys can see. So they had very high odds of opening in this area here, and basically you want to sustain this area here, which doesn't really give you much room. Like holding a 66 point ratio means you basically have to hold, you can't go any lower than like these ranges here. Like it's a very, very, very tight range. Okay? Meaning you can't come back and you'd have to basically hold Friday's real-time lows if that was the case. On a 68-point hold, then you'd be probably closer to 8.4. Does that make sense? So this would be like holding around here, and that's probably right in line with Friday's lows. So if they did, let's say, come back and back test that there. So basically the holding the line here gives you odds of basically pushing to here. Okay. And you're almost always in a zone or channel before releases like this, and you guys witnessed it last week happen too. So this would obviously be the more ideal zone or channel, right? In the event that they fail this range here and so on, that's when we'd be at risk of maybe heading back to the prior channel, which we just discussed those odds, right? Like we just discussed the odds of if they were to fail. That's how you might get back at risk of heading back to this area here. So I feel like those are pretty good like ranges to have heading into this week. What do you guys think? And I feel like based on where they open and the kind of odds that we have, it'll be pretty straightforward if they're going to hold. And they did such a good job of holding the channel on the 8th, like this area here. Or sorry, this is the zone. They did such a good job of holding the channel on the 9th and 10th. So like this area here. This area here. This area right around here, I guess. Why is that a little bit lower? That's weird. Did I move this or something? Oh yeah, I did. Hold on. Sorry, just 1 second. This should be higher. This should be... like this. Okay. Okay, there we go. That makes more sense. Okay, and they did such a good job of trying to hold the zone these past 2 days in here, like during this period here. Do you see that? Like the channel, sorry, I mean. So really good zone hold on Tuesday, really good channel hold on Wednesday, Thursday. And now they're kind of just in this zone here. So I feel like this is a really good range, like pre-FOMC this week. Like obviously, ideally, we want to be in this zone, not this one, but okay, those would be like the conditions. So, and holding above these areas here around 8.4, 8.2 early on in the session is what's going to give us good odds of getting into this area ahead of FOMC. If they start failing these ranges and start back testing, like I said, that 6.6 to 5.7, 5.8 area, that'll give us odds of heading back maybe to this previous channel, or like another scenario could be if they fail to retrace upside and let's say they break the 8.2, 7.7, 7.8, like this range in here. Let's say they test this, which is basically Friday's real-time opening range. Maybe they just come back to the lower part of the zone and then this becomes overhead pre-FOMC. Does that make sense? So those are some pretty good scenarios I think that could play out. I think that the odds of them going all the way back down here are pretty low considering they already took out 66.0102. But the way that odd would... Actually, let me ask you guys. How would our odds decrease of them taking it back to this channel or this zone? What condition has to be met before FOMC for that risk to get decreased? Don't get this wrong. Try your best to like try thinking about this like very, very, very logically. What condition has to be met for them to avoid... So we opened at an okay price, not the best. So what condition has to be met now? Since we didn't get the best opening range to fully, you know, negate any odds of reversals. What condition has to be met before Wednesday? I know, I even saw some of my friends posting like a big bear cycle, and I'm like, what do you guys, like, obviously we can always reverse, but like, I don't understand where like the logic comes in. No, we don't want to go back to the channel. What's your condition to avoid you from going back to this channel? We don't want to go here. What condition has to be met? That's going to increase your odds of avoiding breaking beneath 65, 66, 65, 78, 65. No, it's not about holding. We already talked about that. We had an opening range that was decent. It wasn't the best. What do you have to do to negate or decrease your odds of breaking down? It's not holding. That doesn't decrease your risk. That still keeps risk on. It just maybe delays it. What condition it would have to be met? We didn't meet it last week. You don't necessarily have to get in the bull zone. Obviously, that would be ideal, but you don't necessarily need that much. What condition has to be met? You have to try testing that 6609, 6610. Okay? That would be the minimum condition before the 17th. Everyone's on the same page? Yes. And if we can get better closing prices, good, Slipperman, like maybe at least above that minimum 6594, 6597, 6600. Right? So maybe we get a very, 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 very boring zone day. Maybe all they do to start the week is hold here, maybe hover in here, maybe we test right here, maybe they stall neutral zone, maybe they come back to pin us here. That could be a very high probability for Monday's session, FYI. If they don't want to push it too fast and they just want to kind of decrease risk and increase odds. Does that make sense? This is a very high probability if they want to do something like that. So the condition that has to be met in order to try to sustain this range in here and avoid going back to the means of 6557, 6566 and the channel would be if they meet the upside condition of 660950, 6610, which is a 346 point interval on a closing range and a 358 point interval on a high range. Okay? That's the condition that has to be met. You basically have to come back and, like we talked about at the very beginning of the session, is break these areas here. Okay? Test this range in here. Okay? Minimum like 6603. That 6603 though I don't think is going to reduce your risk. And maybe if you can close above, like if you sustain above here, okay, then maybe you want to close at least around the 9597. That would be like a minimum. If you can test 66, 10, 08, 09, whatever, you want to at least try closing above 66, 65, 95, 96. Are you guys on the same page? Obviously, if you had closing points closer to like 6609, 6610, that would be even better. Right? It's not really a requirement, but and then off the closing range, that's how you could maybe get an early push to 6619, 6620. That would be off the actual opening range of August 1st. Okay? That would be a 356 to 358 point range. That would give you the highest odds. And it makes sense because obviously your highest odds are always in a bull zone. Okay, this is a 358 point range here off of the opening range from August 1st. That's going to give you clearly the highest odds. It doesn't have to be the minimum condition though. Your minimum condition is to at least come back. Okay, sustain this area here. Come back. Let me just delete all of this. Okay. Come back, test this area here. If you test this area here and break, Obviously, you'd probably want to close higher than 9.5. Do you get what I'm saying? Like, this would be an okay close, but maybe this will give you odds of getting a close around 01, 02, 03, maybe 10, right? That's one scenario. If you were to get a break as early as Monday, Tuesday of the 10 spot, consolidate overnight above 02, 03, 96, and then break to 20s, okay? Let's say as early as Tuesday pre-CPI prints, because we have CPI prints ahead of FOMC, don't we, on Tuesday? Okay, that would give you the better odds of getting like some nice range this week and pushes to the channel ahead of FOMC. Do you get what I'm saying? Like, that's where you could get that priced in scenario, like right in here, okay? This will give you a very bullish odd. That's how you can get those odds to expand, obviously. And then we have the contract rollover, which has to be factored in. So just try remembering that these would be like the conditions and scenarios, but you guys have to have really realistic price points that are, and conditions that have to be met. So your first condition for the week is going to be to try testing this area here before the 17th, okay? Ideally before the 16th. If you can test this area before the 16th, your odds automatically increase of sustainment, okay? And decrease risk pre-FOMC and contract rollover and all that fun stuff. Okay, I'm going to put out the report. I don't think it has to be super detailed because there's obviously a lot to cover. I'll maybe do a 2-part series for, up to you guys. Maybe report on Tuesday, post-CPI. What do you guys think? And then maybe we can just get like a late end of week wrap up for FOMC or something. Just because we have so many catalysts this week and such important dates, we might have to do like a 2-3 part series. So I did include the quarterly ranges in this report, so they are in there. But I think we can just start with the very early week conditions, okay? So like maybe just these conditions first for Monday, Tuesday, just to give us like some realistic expectations for these 2 days. Contract roll, is it on the 17th or 16th? I forgot what exact, I think it's the 16th. Okay, so we can also gauge how much they'll roll over based on where they close. So remember how I was saying before, like usually the kind of area you close in can, our 100-point theory can help us gauge the kind of range we'll get. Like the last time they closed at a core range, so then they got a 51 to 56 point rollover. Does that make sense? Maybe if they close in a neutral area, we might get like a 44 point rollover. I don't know if that makes sense to you guys, but usually I've been gauging that that's how it's been working. So we'll have to see, like maybe if they close us around the 88, 06, 10 area, maybe that's going to imply like a 44 point rollover. Is there a gauge of how many points they're going to roll over this time? And the interesting thing about that would be that that could imply that they might just automatically want to break out of this zone and enter a new zone, right? That's just one way of thinking about this. We can just kind of start prepping for where they might look to do that, like off 6,600. So if that's the case, then I wonder if they might want to do like a, then that means that they might push 6620s early. Because that could imply, and when I looked at this, we actually did have like some of those interesting odds around like core areas, and I'll show you guys in a second here. So like let's say like these ranges here, 56.75, those are core intervals. So that would imply that maybe if they test the 6620s ahead of them, do you get what I'm saying? That could be like a range that we could watch for. And then off these ranges here, if it's kind of like what we just said, like off of these open closing price points, it would probably, so let's say off 66, or 6601, area 6602. The 44-point range is probably close to here, like off 01 to here. I just want to check something here on that, because since this is a very calculated spot, because these could be like the overheads that we get once we start triggering these this week, okay? And these are probably 66-point intervals. Yeah, they are. I just want to see if these areas imply core ranges. So what is it, 56.75? They do. Do you see that? Oh, that's very devilish, 6666. Okay, that's weird. And I think the actual calculated area is 6609.25, so it might be exactly 6666. So we actually have some core odds this week then, if that's the case. And I think even when I went back and looked at this, these are the 50% intervals. So usually 256 and 346, the half range is 300 points, 301. So usually 150.5, 151 points is the midpoint. So I didn't even realize that that would be the exact range. And then I think when we went back and looked at this, trying to remember exactly what we measured. I think it was like these were off the closing ranges, so that, or opening ranges, so this makes sense that like this would be that first overhead. Do you guys see that? Like around the 20s. And I think if we had extended, then we'd have like, these are like mass expansion odds. I don't think I'm going to include that in this week's report though. I feel like those are not super, super high odds, but they might be worth just maybe like tracking. But remember how we talked about that 128 point range, guys? Like the 128 to 132? Specifically off the 29th, 28th. That would be equivalent to, where did you say that they opened? Isn't that crazy? So that's basically the equivalent of like the 128 point interval here. Look. It's around this area here. I just wanted to see what the points were off the closing and opening prices those days. And they're basically right around where they're trading. So it puts more confidence that, oh wow. Okay, so the actual closing price on that day is exactly the 132 point ratio from where they stalled at 6606. So yeah, all of it leads back, guys, to like the 66, 47, 48, 50, 52. Those are huge, huge overheads, okay, on this current contract. So not the, and then basically what you could do is like apply the new ranges here above. So if it was like, let's say the 56.75, it should be around that new zone. And that would make sense because usually if you hold a zone, you have very high odds of triggering another zone. If you clear the zone immediately, so like 65.88 to 66.32 gets cleared on the first attempt, like a zone sweep. These don't happen often, but when you get a zone sweep, that gives you very high odds of entering a new zone. Does that make sense? That when they're swept like that, which would be this area in here, like if they were to do something like that, like off these types of intervals of like 128 to 132 points, which would be this area in here. And I think I said at the beginning of the session too, it seems like they're ranging closer to like 129, and that would make sense because that would align with where the contract would roll over, is like 129 points at 4.5. That's really cool, actually. So I wonder then if these areas would align with like the 6,700. They do. That would be insane. I don't know if we can get that this week, but that would be crazy if they did something like that, like by end of month or something, or like with these rollovers. I guess we could just factor it in since we do have the roll, but they basically imply that type of an odd. Huh. Yeah, that's true. Plus, it's not like it's that far off from being like the 346 point interval here. Do you see what I'm saying? Like the 66, 67, 06, 05, 08, like this area, there's definitely a lot of confluence there. Especially like if you start measuring off like those spots we talked about, 5.1, 5.2. Do you see what I'm saying? Those are also 343 to 346 points off these structural lows here on the 22nd. And these lows right here. So, it's basically this area here that has alignment off the 66.44 to 66.50 area in relevance to that contract rolling over. Okay, I think we're pretty prepped heading into this week. I'm gonna put out the report in probably like 10-15 minutes here, probably like 5 my time, with the conditions. So far, this looks pretty solid. It seems like they're trying their best to hold off this 8.8 zone area here and retest. So first conditions are obviously going to be to retest this 9.4, 9.7, this area in here, and see if they can get that push into overnight. Do you guys have any questions before I end the stream here, or do you guys think that this is pretty straightforward? I don't want anyone confused even with contract rolling over, because I think it's should be pretty straightforward, honestly, and especially pre FOMC and pre CPI release. Then it would just be that scenario that we talked about. If they don't hold like the 8.1, 8.2, then they probably have pretty good odds of retesting our annual ranges, which happen to be the exact calculated range that we talked about at the beginning of this session, right? Of those, whatever we said it was, 34, 44, I don't remember. what did we say it was? This area here is 22 points, 6-6, right? 32, 33 points. And then I think this was, these areas here were like the 44-point metrics, close to like the channel, or off of like this range in here, right? So right now you're holding the 66-point metric. So if you start breaking down, then you have the risk of like 44, which is near that, this area here. 33 should be near the top of the means. Another like odd scenario would be is if they did something in between, which would be like holding the 70s. There is a chance that they could do that. So like that would be, how do I explain that? That would be like a 12, 13 point breakdown, but then they sustain a 17 point range. Does that make sense? But if that's going to be the case, okay, they really have to hold the line. Like, so that, this could be one case is if they broke down, let's say beneath 8284, they'd have to basically really hold between, I would say like this area here. Does that make sense? Like you don't really want to extend the 13 to 17 point range, and then you'd have to try to come back and retrace. But that being said, that could limit the range on the week where they might keep it just beneath. So this is a very complex scenario, but this could actually also play out. So let's say they broke down beneath 8.2, but they held above 5.866. They might keep it core bound, which means that they don't take out highs. Does that make sense? So it's kind of stuck on both sides. That would be like you're beneath 66.06, above 65.66. Does that make sense? Usually when that happens, it means that you're not really breaking a 13 or a 17 point ratio. You stay in between. So in order, or yeah, so if you don't break that, then you can't break a 34 point ratio, doesn't get broken. Does that make sense? 34 point ratio off that calculated range would basically be the same thing as you breaking like Friday's highs. Okay? And that would be like closer to holding the line around 7.1, 7.4, 7.5, whatever the case is. But then you stay stuck in a 34 point range. That's one scenario, right? If you kind of stayed within, let's say, the range from Friday's lows. You can measure off Friday's lows if you want, since it's actually super close to these areas anyway, but let's say you take out the highs, but you stall 66.10. So a 66.10 stall would be the equivalent of like you hold 7.6, 7.8, but you don't really push much higher than 09.10, which is why testing upside early in the week can help you reduce your risk of like the major, you know, reversals back to here, to 6.6. Does that make sense? And that would be like a 44 point range, let's say. Yeah, I guess we could have that as one scenario, like a tightening scenario where neither end breaks, I guess. Yeah, they did. But for those that want to maybe keep using this, you can, if it's easier to follow the zone, I guess, ahead. Could just use the current contract we're trading in. I don't think they haven't done it on here. My broker switched over already too. Okay, so that kind of scenario, guys, would be like a very tightening scenario. So far, this is a nice 3-bar setup. So obviously with 3-bar setups, you can get the nice continuation usually. So that would obviously require them to really hold, but this could be a scenario if they did something like this. And it would basically be like taking out that. Maybe they bring it back and engulf it end of day or something. I don't know. Or turn it into a double. Maybe if they hold the line, it could be like a double inside day before the break or something. But that would be like the same thing as them basically holding a 13 point range or a 12 point range. and like max maybe a 17-point scenario. That's a core scenario, I feel, if they did something like that. And then usually with core scenarios, you can get those 25, 34, 55, 56-point breaks. So that wouldn't necessarily be a bullet or a bearish scenario. It would maybe just limit your odds of getting the top of the channel, if that makes sense. Like maybe just a little bit, but I don't really think it would be a bearish type scenario if they took it down. Probably just like mid channel versus upper channel though, like 3.7, 3.6 versus like 4.4, 4.8. These are some scenarios here if they did something like that. The next range is probably close to here. So this is a core hold scenario, which this would only happen if they don't hold tonight, I would say. Like the 8.1 to 8.4 area. So we'll see what happens. I think you guys now have every single scenario possible. You have the stagnant scenario, you have a bullish scenario, you have a bearish scenario, and then you have a basically sideways scenarios if you stay stuck kind of in between. Okay, I'm going to end the stream, guys, so I can finish this. I don't want to be at my desk all day today. And I will see you guys tomorrow morning.